Good afternoon. This is Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to It's Time for Crowdsource Funding. This is an exciting time for small, medium enterprises in Australia because ASIC has finalised, at long last you might say, the appointment of the first group of intermediaries for crowdsource funding. So now's the time, if you haven't already been doing so, to have a conversation with your clients and prospects who might be interested in raising capital using this brand new forum, crowdsource funding. So let's quickly recap on the eligibility requirements. Group turnover under $25 million per annum. Group gross assets to be valued at less than $25 million. Not listed on a stock exchange. Now, eligible companies can raise up to $5 million per annum. That's a fair bit of money. They don't have to raise all of that, of course. Some of the capital raising might be only $50,000 to $100,000. So the crowdsource funding identification process that we're suggesting that accountants should be undertaking to determine the clients within your database who could be interested in this process. And not all of your clients might have thought about this themselves at this stage. Are they a company? Do they meet the turnover requirements? Do they meet the gross asset requirements? Stock exchange, obviously. And have they got a realistic plan for growth? So once you get through the legal questions, this is the first big question. Companies will not be able to raise capital unless they do have a realistic plan for growth of their businesses. So if you've got clients that have got that, they could be the ideal people to be talking to. And what would they utilize capital for? Because I think this is a very important part of the process. If you've got clients who have got large loans, especially loans that are not secured on first mortgage on property owned by the company, perhaps they'll be interested. Would they like to pay out credit cards? Would they like to fund business expansion? Or would they like to fund new acquisitions for their business? These are some of the utilizations of the capital that could be raised. And perhaps what you should be doing is writing those items out, pay out loans, credit cards, expansion, acquisitions, and then doing some research, some thinking about your clients to identify those clients who will fit these particular categories. And then you can have a conversation with them. So how will you promote your interest in crowdsource funding? Well, on your website, you could include some of the materials that are available to subscribers in ESS BIZTOOLS. We've got articles on crowdsource funding. You could promote crowdsource funding in social media on Facebook, Twitter, LinkedIn, etc. You could organize some seminars or webinars for your clients and prospects, whereby you can give an overview of how crowdsource funding operates. And what this will do is to send a message to your clients and prospects that your firm is serious about trying to assist them in this major capital raising activity. You could send a news release to your local media, wherever you are situated in Australia. And if you're in a capital city, don't forget the free local media, who are always looking for articles. And they quite like articles that are pertaining to small businesses, because there's a lot of small business operators, and they may be interested. And you could send emails to your clients and prospects to alert them that your firm is seriously committed to providing a wider range of professional services to assist companies on this journey to be able to raise capital. So what do clients need? Well, they need an understanding of how crowdsourced funding operates. It is different to early stage innovation companies. It is different to Section 708 capital raising. And if your client has not been involved in any sort of capital raising in the past, well, it's very different to anything they've encountered at this stage in their business careers. So they need to understand how crowdsourced funding operates. But they'll need to have a vision for their company. They will need to be able to illustrate to the intermediaries and to potential investors that they have a fire burning in their belly. They have a vision for doing great things with their company, that they're going to grow this company. It's going to be an exciting place to work at, to be a director of, or to be a shareholder in. If they cannot convey that enthusiasm, I think they'll have great difficulty in raising capital. They will need a market analysis. What is the market that they operate in? Bear in mind that companies applying to raise capital as crowdsourced funding can be any age and obviously turnover up to $25 million on a group basis. That means that many of them will already have a very good knowledge of their market and where they fit and how their products are going to be of service to customers. That needs to be documented. In most cases, that would probably be documented by a consultant who's not a practicing accountant. And that person would probably be asked to prepare the marketing plan. What now needs to be done within this business so that the market analysis vision for this company can be achieved? The company will need a corporate chart summarizing who the directors are, who the executive team is, who the CEO is, and who are the other team members that work in this business. Where is the business located? And then this will flow through to a business plan. The business plan should look at the vision for the company over at least the next 3 years so that a reader can understand what the directors and management team are trying to achieve in this business. Budgets, also looking at the next 3 years, should be prepared, identifying how the business is expected to perform. And a cash flow forecast will also need to be prepared, looking at the next 12 months in detail and then on an overall basis for the 2 following years. So we have 3 years of cash flow forecast. This company is going to be going to the market to raise money, so an information memorandum, I believe, should be prepared so that the information that is necessary under the Companies Act to be disclosed is clearly identifiable. It's an extract from the business plan, the information that would be disclosed in the information memorandum. And company directors need to have an appreciation of what the intermediary's role is in this overall process, because the intermediary is not only a gatekeeper, but a very important person if a company is going to be successful in raising capital. The person to first talk to the company directors about what the intermediary's role is, I believe, should be people like you, accountants and business advisors, who can prepare the client, the company's directors, for their ultimate meeting with an intermediary, so they understand what the intermediary's legal requirements are and what their commercial role is. There's been 7 intermediaries appointed by ASIC in the first batch, and ASIC has indicated that they expect to appoint more intermediaries over the next few weeks. All of these businesses have got Australian financial services licenses, and they will be playing an important role in this whole basis. The legislation does not specify how the fees will be calculated to be paid to an intermediary. Each individual intermediary can specify their own fee, and it's then up to the company to decide whether to accept that or move on and have a conversation with another intermediary. The fees could be paid in cash, or they could be part cash and part equity in the company, or they could be totally equity in the company, or some other arrangement. Companies are going to need guidance in having conversations with intermediaries as to what their fees will be. And obviously, the company directors must be satisfied that they can work with the intermediary that they're having some discussion with. This is a very important process. The intermediary is going to be closely identified with your client's company as they go about this journey of finalizing their documentation and then placing that crowdsource funding offer document that has to be prepared according to the legislation onto the intermediary's platform, their website, and then being available on a daily basis for any questions that have been raised by potential investors. So let's look at the intermediary's role. They act as the gatekeeper. It's a term used in the Treasurer's introductory speech on this legislation. They're appointed by the Australian Security Investment Commission to act as their deputy sheriff, in effect. So they have to check all the documentation and sign off that they're happy with it. They have to approve the crowdsource funding offer document, which is the de facto prospectus. I believe that you, as an accounting firm or a business advisory firm, should be preparing the crowdsource funding offer document and submitting that to the intermediary for their approval. The platform or their website that's going to include the information that's included in the crowdsource funding offer document will be available for the public for up to 3 months. That's the maximum period that the share offer can be available for. It can be a shorter period, but that time is determined by the company directors. The intermediary has to operate a communications facility that's available for every day that the crowdsource funding offer document is displayed on the intermediary's platform. And the intermediary will then coordinate with the company directors and management team to ensure that responses are given to any questions that have been raised by potential investors promptly. This legislation contains significant warnings, investment warnings for investors, especially retail investors who are limited to a maximum $10,000 investment per company per annum for a company trying to raise money as a crowdsource funding company. The intermediary has a specific role in accordance with the legislation to ensure that each person who is a retail investor who makes an inquiry about investing in the company is given access to the investment warning and in fact signs that they have received the investment warning. The intermediary also is the recipient of the share application and payment for those shares that have been completed by the potential investor. So all money initially flows to the intermediary. The intermediary has to ensure that the 5-day cooling off period that is available for retail investors is abided by. And when the offer has closed, either because it's been fully subscribed or because the period of time for the offer has expired, or if it's gone for the full 3 months, the 3 months is expired, the intermediary then prepares a report on the results of the capital raising, identifying who the new shareholders are, how many shares they acquired, how much money they paid, and the intermediary then prepares a summary of that information, identifying the total amount of capital raised, and is able to deduct from that the cash component of the intermediary's fee and forwards the net amount direct to the client company's bank account, and also sends a list of the new shareholders, names, addresses, etc., to the company secretary so that the share certificates can be issued to those new investors who are now going to become shareholders in the company. The intermediary does not play any further role in the company once the capital has been raised and the settlement has been made with the company. There's no further role for the intermediary, but there is for accountants. But let's look at the names of the intermediaries that have been appointed at this stage. They're there on the screen. Big Start, Bill Folder, Virtual Financial Services, Equities, Global Funding Partners, IQX Investment Services, On Market Book Builds. You can go to the internet and find out further details on each of those intermediaries. Your client may need to talk to 2 or 3 of these intermediaries to get a feel for them. Is the client's board of directors comfortable with the intermediaries that they're currently talking to? Because this is a very important relationship that your clients are going to be undertaking. So what's in this for accountants and business advisors? Why are we at ESS BIZTOOLS getting excited? Well, we're getting excited because we think there's some real accountants work to be done to get these companies into an investment-ready position. Out of that work that I summarized a little bit earlier that needs to be undertaken, I think accountants' work or business advisors' work would be the corporate chart, business plan, budgets and cash flow forecasts, the information memorandum, and the crowdsourced funding offer document. There's a fair bit of work in doing all that. And I think the fees for that work could be somewhere between $20,000 and $50,000. In some cases, it probably could be higher. I'm giving you what I consider a ballpark figures. There's also another potential fee that you might like to consider having a discussion with your client, probably when they've finished the capital raising, and that is offering a virtual chief financial officer company secretary service. Because whilst these companies might be raising $300,000, $500,000, $1 million, they may not have sufficient cash flow to want to employ a qualified accountant as a chief financial officer, company secretary. Nor in many cases initially will they have enough work to keep that type of person fully occupied. So it's an ideal opportunity for you to then have a conversation with them about supplying a virtual chief financial officer company secretary service using the technology and the communication facilities that are now available to enable you to perform that service for that company. ESS BIZTOOLS can assist you in this process. We offer a first-class service so that you can offer that first-class service to your clients and prospects. You could subscribe to our standalone ESS BIZTOOLS crowdsourced funding product if you wished. And I'm just going to click on now to show you the preamble that you can click on to the site which we showed you there before, ESS BASIP, and read the detailed commentary that we have prepared on crowdsourced funding in a bit more detail than what I've probably summarized today in this webinar. And if you wish, you can watch yours truly in a video to get a better appreciation. And we also have a webinar that's available. So these are obviously free tools that are available for you to go to if you wish to get a better understanding of what's in the crowdsourced funding offer document. Now, that material for crowdsourced funding is also included in the overall goal package, which I'm going to show you now. So that product package, and indeed all of our product packages, are also included on the ESS BIZTOOLS goal package. So if you click through to essbiztools.com.au, you will then be going onto our website, which contains a whole range of material. If you wish to view the crowdsourced funding document, you'll just click on Business Advisory Services. What I'm showing you there now is the introductory training area, but we're going to go through to crowdsourced funding. And you can click onto the Learn More, which is where I was just a moment ago. So that will give you an overview of what's included in those packages. Once you become a subscriber, you'll be able to access the material for your use within your firm. So our commitment to you is to provide a series of products that you can look at as part of this webinar today. You can go onto the site and look at that material on crowdsourced funding. We'll also send you early next week a copy of the slide presentation that we've used in this webinar today, and we will give you a link to the recording on this webinar. Incidentally, I've been forgetting to check the questions. I'll just go back on. I did ask at the beginning of the webinar if you had any questions to come through to me. There's no questions there at this stage. If you have any questions, please type them in now, or you can email them through to me later on this afternoon or over the weekend. We will promptly respond to those inquiries. It'll be Monday, probably now, before we get back to you. But our whole modus operandi at ESS BIZTOOLS is to supply accountants and advisors with a range of business advisory services tools to assist you to be able to offer a significant service to your clients. I honestly believe that crowdsourced funding is a tremendous opportunity for accountants to move out of the traditional areas of only preparing income tax returns and matters associated with taxation to undertaking some other interesting work that your clients, who I assume are mainly classified as small, medium enterprises, have indicated in survey after survey over the last 15 years that they're looking for. I hope that this webinar has been able to give you some information on that. If you're looking for further information, please send me an email, peter@essbiztools.com.au, or telephone on the toll-free number 1-800-232-088. I'm just going to check again to see whether we have any questions. I don't seem to have any questions. I sincerely trust that means that I've answered any of the questions that you had today on crowdsource funding. But if you think of some questions later on that you would like to discuss with us, please don't hesitate to contact me. So on this Australia Day Eve, happy Australia Day, and I look forward to hearing from you on any questions next week, or would like to welcome each and every one of you who participated in this webinar today as a subscriber to either the gold package within ESS BizTools or the crowdsource funding package that is a standalone product. Have a great day. Have a great long weekend. Thanks for listening. Goodbye.